Everyone. All right, so today I'm going to teach something that's valuable, but it's for pullback traders. All right, so we're going to learn how to basically buy pullbacks. So I'm going to teach this style, and it's not based on what most folks have seen in the past. It's not based on like Fibonacci or test of breakout or whatever. All right, so there's multiple ways to, if you look at a chart of a market that's uptrending, typically you'll see this up, down, but in a much more complex way. It's never this easy. As you know, it's never this easy, right? But the model of rally, pullback, rally, pullback, rally, pullback does exist. That is what goes on. It's just due to time manipulation and things like that, that this looks very complex. All right, and so the way you want to approach this is to identify when there's a rally, where will the pullback be? So then you see it pulls back and then it rallies again. Okay, now there's a rally, where will the pullback be? So what most folks will do is they'll just draw support resistance lines like that. There's two options. What you'll see majority is the price action trader. They're going to draw the line on top of the high because of the belief that resistance once broken becomes support. Supply and demand traders will do something else. They will look for the demand zone and they will look to buy here. All right, so this is, let's just write it down. So pullback. So one is resistance becomes former support resistance areas. A second method is supply and demand zones. Third method gets into the Fibonacci stuff and all that. So Fib retracement. And then there's many other methods. I'm not going to go into them, but let's stick with the other method is volume based method, basically volume profile based method. So I'm going to show this today and how it can be used to identify where the pullbacks are going to go and actually show you that it works. All right, now I'm not saying the others don't work, but the others, it would be a very strong confluence to have volume with one of these. Like it would be very strong confluence to have volume with either the zone or the support resistance areas. Very so anyway, so this is what I'm going to show, and I'll just show a basic backtest. All right, so you see that it works. Maybe I'll do it only in one market, or maybe I'll do it in the ES as well as crude, but that's the idea. The thing you have to understand is these areas that are based off volume, some folks think they're value, right? Some idea of value. But what they really are is prior buying and selling areas. Because that's what the volume buildup did. It was just buying or selling. And this buying and selling itself becomes support and resistance. So the volume, some will call it value, but it's just buying and selling spots. All right, anyway, so getting this right does require two things. One is, yes, the profile, which everyone has. The second thing is something that I use, which is the tape reading chart. You can use any footprint chart and it'll help you. So you want to use volume profile with a footprint chart. I call this the tape reading chart because it's built in that way, where what Wyckoff had explained. So these two things is what you'll need. And you can I'll show you how to use the profile and all that. All right, let's just start. All right, so on my right hand side, I have the ES. Underneath, I have the tape reading chart. How am I using the tape reading chart? Is to identify high volume areas. Because of the boxes, they will identify the high volume areas, which will help me pinpoint then the exact location, typically in the high volume boxes, where price will be attracted to and where the buyers will just step in and buy more. So this is the method. On the top, I have an hourly ES. So now watch this, all right? So the first thing is, I see the market is rallying because I have an indication rally, and also if the price breaks through an average and hits the upper band, it's basically going in that trend. It's creating trend, breaking out above prior highs. So I have a rally, now I want to buy the pullback. It's really that simple. Where the hell is the pullback going to go? So this is going to teach me on how to buy pullback. So I'm going to use a profile, right? Just take the low to the high. All right, first step is to take the low to the high. If you see the profile level is too high up, then you have to adjust the profile and bring it back. So what we see here is that when considering this accumulation right here, right? Accumulation or reaccumulation. That's what the pullback after the point figure, whatever the tape reading chart breaks out, pulled back, and it looks like a point figure sideways consolidation. It's really reaccumulation. So I want to know where the hell is going to go. You know, how much of a pullback and all that. So I'm placing the profile, and then I play with it a little, and I drag it back and forth. And we see that it's a very strong area here. So if the market pulls back around this area, buyers should step in. And then I'm going to be looking into this accumulation area and seeing where is it? So the 20 here is what the profile is targeting. It's saying that the market will come back down to this, which is supported by 20 times 10,000. So basically 200,000 contracts here. There's also this 17 print. So I'm also paying attention to the 20 and the 17 now, because I know that this thing is going to pull back around this area. So it pulls back and it tests here, and that's where it goes. So it was a little bit higher than the profile. Instead of the 20, it goes to the 17 area. The 17 times 10,000, 170,000 contracts right there. Basically, you go right down to the bottom of the rally. Now we're going to take a look at the next one. And we notice there's accumulation and there's a rally. So we just do the same thing. From the low to the high, and then you adjust. So if you see that the profile is high up, it's typically because, you know, at the high you have some distribution and at the bottom you had reaccumulation. So in that case, you just drag it back. If it's still not giving you the level, you pull it back. Bingo. Right there is where it's going to go. Now you look at the tape reading chart and say, oh, you know, is there something around here? You look in that area and you see that 17 is there. So that basically it's going to come back and pull to support. So you just, that's it. And that's what it does. It tags it and reverses to a new high. Now we do this again. Look for the next rally. You have to find the rally, right? Look at the reaccumulation and draw the line. draw the line. There's 17, there's a 10, and then you adjust from high, low to low, high, and all that. This is the so you do it from here, and you get the exact tag. All right, so we can continue. From low to high, and it basically, pulled back to this level. You take a look at your rally and you realize there's heavy volume here, there's heavy volume here, whether it's a 16. And you always adjust a little bit to see like if there's any other levels. So that's where it predicted, that's where it went. It tags it and then goes. Then it just flew, and we have rallies here, we have rallies. Take low, say it's one of these highs. If you draw it and it's too high up, just pull it back. Low, high, what's there? Right there in that 22, that should hold. All right, so now it pulls back. All right. Test 1, test 2. Now we find the next rally. Again, if the level is too high, because remember, why does this happen is because at the low there's accumulation, at the high there's distribution. You want to profile the accumulation. So that's why sometimes the level is going to be in the distribution area. So you want to pull back a little or adjust, and you'll get the the area. See how I'm adjusting? So what's here? Okay, this line of support right here. And it tags it and then makes the higher high. So it's going to keep on doing that until it fails. All right. So now what we want to see is what's going on here. Because it tagged the low of this channel, the trend here did reverse. High to low. If the level is too low, it's because at that point they found accumulation. So what you want to do is drag it back. It should be around here somewhere. And that's where you had 25 times 10,000, 250,000 contracts. However, on Friday, it just broke out above it. All right. So what do we want to do? We want to look for longs now. Why? This is a rally. What do? You profile the accumulation. Where's accumulation? Here. Low to high. It's too high up. Bring it back. All the way down here. You can bring it back from the front or here. And then confirm with the accumulation print to see where is that print, right? Anyway, let's do it on crude. So I'll just pick a high. Watch. High to low. too low, bring it back, bingo. What's there? This thing. Tagged it and puked. Hide a low, tag, until this thing happened. This right here is a crack in the trend. The downtrend is cracking. Test right there. So anyway, hope you learned something. The idea is really simple. If you try it, this is one way to profile, the swing, and specifically accumulation at the bottom, from the bottom of the swing, or the distribution at the top of the swing. It really helps to have like a tape reading chart, because you can see, the high volume bricks or the high volume boxes, and then coordinate that with volume profile. And that'll just give you levels. All right, so remember, the first thing is levels, then signal. So however you choose your levels, it could be based on demand and supply zones. It could be based off of test of breakouts. It could be based off of volume. It could be based off of many things. Why the volume is a good choice is because it's actual data points of heavy buying and selling. Actual data point of heavy buying and selling at the low and the high, or basically the accumulation or distribution or the absorption areas. Anyway, take care, have a good day, bye. All right, let's go over some markets, and just going over ES and crude today, as well as seeing where the money is flowing into. All right, no brainer, money's flowing into Bitcoin and natural gas. So you understand the political situation, and basically money's flowing into natural gas and Bitcoin. So those are the two markets that have the most relative strength. Short-term relative strength is in those two markets, short to intermediate. And the weakest is this bean oil. And also I'm expecting crude to get stronger. You know that there was sell-off last week, but let's see if that's just a quick pullback, and whether the highs get taken out. As far as higher highs and lower lows, soybean meal, soybean, and the YM. So soybean meal make a 172-day high, soybean 50-day high, and YM 35-day high. So something's going on in these markets. We know that markets just went crazy. In the last rally, they just went up a lot, and especially in the Nasdaq. And this yen is making 42-day lows, which is a good sign, because usually yen goes down when the markets go up. There seems to be some type of inverse correlation there. I think that's about it. So that's all we can glean. Holy cow, it's not 42, it's 426 day. 426 day lower low on the Japanese yen. Shit. Yeah, that's bad. All right. So on crude, maybe it's a counter trend up. If you take a look at the daily, right? So last time it went down, pulled back right here to 89 50 and then puked. So chances are it's going to go to 82.50. So I'm looking for higher highs to about 82.50-ish. This area is where resistance, and you can see there's distribution, all this sideways action here. That's supply absorbing the demand from the low. This supply absorbing this demand. So it goes sideways, you know. Why it goes sideways is because when it goes to that level, buyers buy and sellers sell when they buy. Then buyers buy again, then sellers sell what was bought. So it goes back and forth like this with a lot of bars that are overlapping. And the reason is the buyers are unable to follow through to the upside from that support area because supply keeps coming in and absorbing that buying. The red candles absorb the green candles. So that's what happens. Then they try it again here. Buyers try to come in with only one bar, and the red bar comes in right afterwards. Why? Because it's just absorbing that demand. Supply is absorbing that demand. So that's why the candles will be sequential in a tight range. And that's how absorption looks all the time. Anyway, so looking for a pullback into that area about 82.50, then it should go there. You'll see that right here was a perfect test. Right here will be in that area. That's where there are a lot of stuck buyers. There's one candle, two candles, three candles in that area. So daily candles and those buyers are stuck if they haven't gone out already. And then you have a breakdown with this expansion here, taking price into a new range lower. So typically that's what you expect. You know, absorb, finally nothing left to absorb, break. Absorb, nothing left to absorb, break. Pull back test, buyers get out, new sellers get in, all leading to selling pressure, continues the move down. So that's what happens. Anyway, so what am I looking for in the meantime is price to continue to go higher to around that 82.50 level in crude, right? So in today the market action was like really, it was fairly predictable. You know, this area, I was looking to go long here, but the damn thing just flew. You know, I didn't get any pullback, and it occurred overnight, but it was ready to get in, but it just occurred at 2:30 in the morning. So price was pulling back. I knew it was going to come here, I knew it was going to go there. I was ready, but it just happened overnight, and the change of behavior happened, as you can see here, all found in advance. But if you're not awake, and even if you are awake, it doesn't pull back. So what are you going to do? After that, the market rallied, pulled back here. I don't know what happened here. Was that? Oh, yeah. My order was here, and the damn thing didn't pull back to test. It just continued. So anyway, so it rallied up, and then it pulled back here. Perfect test, exactly where I was expecting it. But it's too late in the day, and it doesn't really give that much of a move, right? So market rallies, pullback test, rallies, etc., etc. Right? Now over here it's getting interesting because they've taken out the high, they've got the liquidity up here, right? This liquidity is needed so the buyers can buy discounted prices and sell into the new high. So now it should, let's see if, if the pullback, how deep the pullback goes or whether it's going to break, because the market's already rallied to the top of the Kelter. And usually when it gets up here, what happens? It goes up here, it pulls back. It goes up there again, pulls back. This is the third time, folks. It's ready for the pullback. And now what it needs to do is it has to break the pullback level. Once it breaks the pullback, it will initiate heavier selling, coming back down to this area about 77.16. But the thing is, the pullback buyers have to fail. And I think they will, because there's a lot of selling up here. How do I know? Look at this. Look at this print. What does that say? 104,000 contracts at the high. 104,000 contracts at the extreme high. That's not a breakout. That's selling highs. That's what it is. It's selling highs right there. Look at the rest. 37,000, 27,000, 31,000, 38,000, 45,000. Then 104,000? Come on. Obviously, it's distribution right up here. But to confirm it, you need to see the pullback fail and a change of behavior, which I know is coming because they already started selling here. I'll show you. If you observe this selling wave was 2.76 times the normal selling wave. So this higher high, liquidity, they pull back, those buyers got in, sell it. Now these sellers that did this damage here, they need to continue selling. And as they continue selling, the buyers are going to exhaust and the sellers are going to break through. And when that happens, it's going to initiate downtrend, and then you're looking to get in on that downtrend all the way back to the pullback level of 77.16. So this is a counter trend trade, but the volume is baked in. The sellers are there. You don't get a print like this because, retail is selling. This is smart money right here. So they're already establishing the initial position here in this area. Okay, and from that position, you have heavy selling. Very good. Now these pullback buyers are still there. They tap, goes to the high, sell into it. They're selling into it. And now we just need to see everything confirmed with a change of behavior that the pullback buyers do not buy. And when that happens, it's game over. It's game over for the bulls. Anyway, the next market here is the ES. So the ES, again, this also is setting up the pullback because I'm just watching this here. It rallied, pulled back here. I thought it was going to be a deeper pullback, but I think that deeper pullback is coming. Because if you see what it did, it pulled back here and then it went to the higher high, right? This high is 28.25, and I think this is the same, 28.25. Anyway, it's good enough. They sold into that high. As it goes up, you sell. All right? And there's a little spring right here, or test. I don't know what it is, but it was either a test or a spring, whatever, right there. All right. So now what I'm looking for is this area here to get tested. But the only way it's going to get tested is you got to take out these lows. So just wait for it. I want to see what's going on here, because this area is where the buyers may jump in. That 44.20.25 right there, 44.20.25. We'll see if they jump in or not. The market is so slow today, you can't figure it out. Like, it's just chop, chop, chop. If you see, market rallied over here and pulled back, but it didn't pull back all the way. It rallied, pull back, blah, blah, blah. So we want to see it pull back to this area, see if it holds. If it doesn't hold, we'll see if it breaks. If it breaks, you get the counter trend all the way back down to 43.80. And if it happens overnight, fuck it. Just wait until it goes to 43.80 and then start looking for longs. Simple as that. All right? Take care. Bye.